No, I think a de-escalation means a weaker yen. I believe it means a stronger US dollar versus the Japanese yen. And I believe it means a stronger US dollar versus the euro. Again, that's what occurred last night. That's what's been occurring. And both of those things are the most heavily weighted in the DXY. Do I think the Australian dollar and New Zealand dollar will outperform the US dollar? Yeah. I think under de-escalation, that's what will happen. Do I think that the US dollar will outperform gold? Yep. So I don't think that it's black and white like that, that a de-escalation means a weaker dollar. I think that overall it means a stronger dollar, except for Australian dollar, New Zealand dollar, and I'm not sure about the Canadian dollar, which has come up so far, so hard, so fast. Yeah, well, that's the market, right? That's the market. It's traders taking either side of the trade and then getting involved. But we're going to see really soon. We're going to see in about 45 minutes, what happens with the euro. But again, last night, if you look at the euro, and here it is. This is during Asia. Come down here. Let me look at a 1 hour time frame with you. This over here is when the attack was happening, and you saw the stronger. It's over here on these two bars. This is the attack, and you saw the stronger euro when it was during the attack, and that was a big risk off event, right? You saw the yen strengthening, you saw gold kicking up. It was a strong risk off event, and it was the euro outperforming the dollar. And then once it was clear that it was off, you saw gold fall, you saw oil fall, and you saw the US dollar gain. So that's my thesis. And again, that's the market, people seeing it and reacting to it and placing bets accordingly, differently. And again, I have no problem being proven wrong, but that's my thesis. And why do you say the opposite? Yeah, I agree. And again, I want to learn. I'm always open to learning. And of course, as this event occurs within the next hour, great. That's the opportunity for all of us to learn and see. Again, there's no way I'm trying to say that I'm correct here, because I don't care if I'm correct or not in the market, right? Every time I enter a trade, I'm entering it because I know that what happens works over time, giving the reasons and circumstances I'm taking them. So if I'm wrong at any given time, that's fine. But this is why I'm leaning in how and why I'm leaning the way I am. I don't need to be right. If someone could show me different, I want to learn and always improve. I mean, good point. I my own personal opinion is that's the thesis that we've been under, for the last couple of, since I've been trading for the last 20 years. I believe things are changing in the fact that now when the US is starting this type of conflict, and with Iran, and you have, China and Russia just about 10 days ago or a week ago, very recently, just did naval war drills with Iran, right? So if the US is to escalate versus Iran, all of that is going to do is cause further de-dollarization, right? With those that are allies with Iran, Russia, China, North Korea, right? So whereas in the past that would have been supportive of the dollar, this type of conflict is actually not supportive of the dollar, because it's causing further de-dollarization. It's causing people to move away from the dollar. It's causing people to find alternatives to the SWIFT system, where they could be cut off from, sanctioned, and not able to participate, which is happening to Russia, which is happening to Iran, and slowly but surely, as China and Russia are stockpiling gold, maybe you're going to start seeing oil settled in gold instead of the dollar. And at that point, that is really, really, really bearish the US dollar. So I don't know that the same premise will continue going forward. And I think you could see right now the market already pricing in that in differently when this type of conflict is happening. and this is the reason for it and why. Um, I think the only time that, unless you start seeing a severe system breakdown going back to the crisis, then you'll have that US dollar safe haven because there's nowhere else to go but the dollar, right? But that is like if the system breaks, of something within the monetary system is broken, then of course you won't see gold rising in that situation either. You'll see gold collapsing, and you'll see that US dollar strength. As far as a geopolitical event such as this, you're seeing gold rising, right? It's not a systematic failure; it's a geopolitical tension, and I think that's why you would see the euro strength, because I think people would feel more comfortable about you know trading in euros than dollars. Yeah, in my opinion, for sure, Trump wants a weak dollar. Trump wants a weak dollar, not because he thinks it's. Trump wants a weak dollar, not because he thinks it's the best for the country, because he knows it'll get him reelected. Plain and simple, right? So what happens after Trump gets reelected? I don't know, right? I don't know. Does he make some really hard decisions that are going to benefit the country? He might, right? I would not be surprised. Or are the people who think that Trump's all about ego correct, and he's thinking about his legacy, and will he continue to weaken that dollar and look for infrastructure projects, to really spend some stimulus, and we'll see. But right now, as he's looking at an election a year from now, he absolutely wants a weaker dollar. He's you know People make fun of him that he can't even play like shoots and ladders or checkers. I mean, he basically forced, by putting tariffs on China at the times he did, he forced the Fed to lower rates. Right? That was pretty crafty. And we'll see what happens after the election. Right now, he definitely wants a weaker dollar, but more importantly, the Federal Reserve wants a weaker dollar. The Federal Reserve needs a weaker dollar, right? No one is buying treasuries right now because the dollar is too high. They need a weaker dollar. The Fed is the only one buying treasuries right now. Let's be right. I wish that we could plus one comments in YouTube. Thanks for that, and I feel the same way. And I believe that was Be Somebody FX who really sparked that discussion that we got going. So, just a shout out to Be Somebody FX for upping the game and helping us do that. Chris, again, I wish I could plus one these comments. Appreciate that. Thank you. I don't know if anyone's watched, the Joe Rogan podcast. I think by now everyone probably has watched the Joe Rogan podcast. But I think that I saw on YouTube they have like Joe Rogan clips, and they take out like clips of certain of his podcast. I think that was a worthy clip that we could include on the channel. Yeah, Chris, I also wanted to say, and I know you're only doing it because it's just honestly what you felt and believe. You're not doing that to for any other reason than that, and that's why I appreciate it. And Be Somebody FX, I think the most important part of that is I have absolutely no problem to be proven wrong, and I'm always looking to learn. So I'm glad for it. It's really not about. So it's so funny because being a successful trader is not about being right. You don't need to be right to be successful. You just need to do what is smart, right? You just need to take trades at the most opportune time, right? Which is always selling off of strong resistance and buying off of strong support, and doing that with a favorable risk to reward. Good position sizes, and as well as putting the most probabilities in your favor, right? Strongest currencies versus weak currencies, right? The right time of day. It's just layering in these additional edges and upping your probability so that you're taking high probability trades. And then when you take the trade, it doesn't matter on any individual trade if you're right or wrong, because you're going to be more right, or you're going to be more profitable. You have a win rate of even 45, 47% and still be highly successful. Blair, thanks, man. Appreciate that. Appreciate you very much. And I so much appreciate having the opportunity to, to be able to work with you guys and interact with you guys. It's a good thing. This is an interesting tweet. If you're on Twitter, look for this guy here, Luke Groman. Definitely a good follow. And this is kind of related to what we were talking about earlier. He's saying, paradoxically, the more the U.S. uses its military, the stronger the U.S. government's greatest adversary becomes. What's the U.S. government's greatest adversary? I think that is the interest, the debt. It's definitely the debt, and therefore the interest gaining on the debt. The debt is now $23 trillion. And I believe that the interest yearly on that now is $1 trillion. So I think that is why we're seeing a weaker dollar. When we're talking about, we're seeing that shift away from, whereas that used to be more of a risk off type a risk off type situation, and now we're seeing the dollar actually move adversely. The U.S. government's greatest adversary isn't China, Russia, or Iran, but the most powerful force on earth, compounding interest. There you have it. So this will cause the U.S. to take on more debt. It already has $23 trillion worth of debt. It's paying $1 trillion of interest a year. The compounding interest is a killer.